Hello everybody. Today we will be resuming the target series for Indian economy and Indian financial system. What we are targeting? We are targeting the JAIIB November 2025 exam. Along with the IFS subject, you are getting the quality content for the remaining three subjects as well, be it the PPP, be it the AFM, or for that matter, RBWM. If you are not regular till now, highly advisable from our end that you must show some consistency from now on, because the time which is there with you, that which is in hand, it is very less. Now you cannot just be very complacent that okay, I would be giving the mock test after 2 months, or for that matter I will be revising whatever I have read after 2 weeks, like that. No, whatever you are doing, just try to finish it off in real time. That is the message, because again, time is limited. Today we will be focusing on the most important module, that is module D of IFS, and the unit number 38 will be covered. When I talk about the name of the unit, it is venture capital. But what we have to remember from this particular video is two, or you can say three important concepts. First one being the definition. What do we mean by your venture capital? Next, you must know that what is the history of venture capital in our country. And third one, that what are the regulatory norms for the venture capital in our country. So all these things we'll be covering today in this particular video. Starting off with the basic introduction, what do we mean by venture capital? See, for starting a business, always remember you need some amount. Okay, some amount must be invested by either you, or for that matter by the investor, you or I, as we know it. But this particular amount, whether it will be provided by the investor or not, it is at the prerogative of this party. And the particular party must have certain background so that they can attract these investors in investing in their companies. But what about those people or those entrepreneurs who have just started their business? Leave aside the business altogether is at the small scale, or at max at the medium scale. For them, banks hesitate in providing the loan. Why? Because they do not have any kind of history of loan in the previous past. So for all those startups, or for that matter, new ventures, new business ventures, which are small to medium scale, who will come to rescue? These venture capitalists. And whatever capital, whatever amount these venture capitalists will provide to the fresh entrepreneurs, fresh, you can say startups, it is known as venture capital. Fine. So I hope that the basic introduction is clear with all of you. Now let's see what the book says. So venture capital, it is a private institutional investment made to startup companies at early stage. So early stage investment, you can say, is known as your venture capital. And early stage means you have either just started the business, or for that matter, you only have the idea for now. You have not even started yet. So your idea will be the benchmark based on which the venture capitalists will be providing you the funding. So always remember, in venture capital concept, or the venture capital fund concept as we call it, VCF, venture capital fund, one thing is quite prominent. What is the level of innovation? Here you can see some innovation, you can say symbol is there. So innovation skills, if you have that, and based on those innovative ideas, your entrepreneurial skills only, you are starting a business, then only the venture capitalists will be interested in your business, in funding your business. So VCF, they are investments made by the investors who seek the private equity stakes in small to medium businesses, and they have the potential to grow. Always remember two things for venture capital funding. One is your innovative ideas, and second, what is the potential to grow? If you are not having the potential to grow in future, then we are afraid that we won't be able to give you the money. That's what the venture capitalist will say to you. But if you have the potential to grow, you present your idea in such a manner and show some examples in the market that yes, they have also started, XYZ firm has also started with similar idea, not the exact same, but similar idea, and now they are having good projections to growth and actual growth as well, then venture capitalists will give you the money. These investments are generally high risk and high return opportunities. Nobody knows that what this particular innovative idea will land you in. Supposedly, the idea in the prima facie terms, it was very lucrative, it was very interesting, but the returns are not high. Although the investor has taken a high risk by providing some capital to the entrepreneurs, but the idea, when it was, you can say, reinstated in the actual market, the benefits which were touted to be made from that idea, they were not at all par to the expected terms. So high risk has been taken, but the return is lower from the business point of view. But if a particular venture capitalist is there who is having the same kind of investment going on since 20, 30 years, good year of experience is there with them, then high risk as well as high return will also be there. They will not provide any kind of funding to those ideas which they have, which they visualize as a bad idea or a flop idea. So always remember, the venture capitalists will provide you with the capital, but their investment will be high risk as well as high return. The returns is what they want from you. That is the fresh entrepreneurs. The people who invest in this money, who invest this money become the financial partner and are called as venture capitalists. So VCs, as we know them, venture capital is the most suitable option for funding the capital for companies which are startups with little or no track record of performance. So either you have very little track record of your performance, or you do not have, you do not have any kind of proof that yes, we have made a profit in the past, be it a minute profit, a minor profit. But yes, if you have a lesser amount of profit or great profit, it does not matter. What matters to the venture capitalist, it is the potential to grow, and along with that, what is the innovative idea involved. Now, when we talk about Indian context, in India, the evolution of venture capital started off in 1970s. Since 1970s, this term is prevalent in our country. When I talk about the foreign example, that is the USA, there venture capitalists or the venture capital fund is an old phenomenon, an old term. And thanks to this VCF only, we have seen the startup ecosystem of USA at boom. Not today, but when it was in the boom, it was only thanks to the venture capital funding. So in India, which committee gave this idea or the concept of venture capital? It was Bhatt Committee. The full name was Committee on Development of Small and Medium Entrepreneurs in the year 1972, which recommended the creation of venture capital in India. So always remember, the creation of venture capital in our country was the outcome of Bhatt Committee's recommendation. The committee urged the need for providing such capital to help new entrepreneurs and technologists in setting up the industries. So, setting up the industries means the fresh ideas, the innovative ideas which the entrepreneurs have, these industries will be implementing those ideas and reaping the benefit from that particular innovative solution. A brief description of some of the venture capital funds which have been established are as follows. So now we will be chronologically discussing the venture capital funds in our country, how they started. So the idea started off with the Bhatt Committee's recommendation, but it was on paper, only on paper. The first venture capital fund was established in 1975, and that fund is known as RCF, Risk Capital Foundation. IFCI, that is the Industrial Finance Corporation of India, launched the first ever venture capital fund of our country in 1975. So RCF aimed at supplementing the promoters' equity with a view to encouraging the technologists and professionals to promote the new industries. So new industries, what is the common point here? Why the uh, investors will be interested in these new industries? Because they have some innovative solutions, plus the growth projection is there, right, in the near future. Next, we have some seed capital schemes. See, this seed capital is what? The initial capital. As you know that to grow a tree, you initially need what? You only need a seed. Okay. In simpler term, simplest term, seed investment means the initial investment for a business. This venture capital fund was launched by the IDBI in 1976 with the same objective in mind. So first RCF came, then the seed capital schemes launched by the IDBI. Then we have some venture capital schemes from Government of India also, which started off with in the seventh 5-year plan. Okay. Seventh 5-year plan, venture capital funding obtained the official patronage with the announcement of seventh plan by the government of technology policy statement. So TPS, that is technology policy statement, it was given in 1983, and this was termed as the first government intervention, fully government intervention in the field of venture capital market in our country. It prescribed guidelines for achieving the technological self-reliance through commercialization and application of the technology. So, as all of us know, that technology or the technological aspect of a particular industry is the first and the foremost thing which the venture capitalists will see. So, the application of technology, how it will be helping you to expand your business, that was the prime, you can say, objective of these guidelines which were issued under the TPS in 1983. Then we have IFCI Limited. It set up the VCS scheme, that is venture capital scheme, in 1986. So after 1983, we have one scheme in 1986 to encourage the new technocrats in the private sector to enter new fields of significance, but with inherent high risk. So risk is always high whenever we talk about the venture capital funding or the mechanism overall. Risk is very, very high because the return will also be high. So in the securities market, you might have studied that whatever the risk is there, it has been replicated by higher returns in the past. The scheme was designed to provide the funding for prospective industries in the form of venture capital to economic activities having risk, but also high profit potential. So high risk, high return, as well as high profitability for the firm as well. See, risk is high for whom? It is for the venture capitalists. Returns are high for whom? Venture capitalists. Profit is high for the firm or the enterprises which has you know, which has the uh, capital or the investment from these venture capitalists. Next, the pact. What is the full form of pact and why it is important? Because ICICI undertook the administration of this program for application of commercial technology known as pact, and this was the first direct private sector intervention in the field of venture capital in our country. So ICCI, along with the US aid, that is the United States Agency of International Development, they started this pact framework for the venture capital in our country. What was the initial grant given by the US aid? It was of the quantum $10 million. The program aided at creating the specific needs of the corporate sector industrial units along the lines of venture capital funding. So always remember, the corporate sector industrial units, that was the heart and soul of this PACT program. What is the full form? Program for Application of Commercial Technology, PACT. See, in the examination, you must remember the chronology as well as you must remember the full form of all the evolution of the venture capital in our country, not only for this chapter but all the chapters, because in IFS we have seen that IIBF normally asks at least I'm saying 3 to 4 questions based on the chronology only. In May 2025, chronology based questions were asked, and same number of questions were there, 3 to 4 in respective, you can say, shifts. Next, we have the government fund. So government fund, it was started off by the central government in 1986. So IDBI, as the nodal agency, administers the venture capital fund VCF created by the central government with effect from 1st April 1986. And when I talk about how the government was funding this particular fund, because government has limited sources, so government started to levy the R&D levy on all the products which you are purchasing from abroad. So the government started imposing R&D, that is research and development levy, on all the payments made for the purchase of technology from abroad, including the royalty payments, lump sum payments for the foreign collaboration, and payment for designs and drawings under the R&D Cess Act 1986. So always remember, in 1986, the R&D Cess Act was enacted, and under this act, R&D levy was started off by the government of India. And what was the aim of this levy? To fund this VCF, that is venture capital fund. Okay. The levy was used as a source of funding the venture capital fund. Next in line is the TDICI. What is TDICI? The full form again is important: Technology Development and Information Company of India. So you are developing the technology as well as the information technology in the country. So IT hubs were established since 1991. More IT hubs were established thanks to the globalization process in our country under the economic reforms. But prior to that also, somewhere down the line, the IT wave has started to come in our country. So in 1988, the ICICI sponsored company, that is TDICI, was founded, and the venture capital operation of ICICI were taken over by it with effect from 1st July 1988. Okay, so earlier we have seen ICCI is there in pact also, and the second venture is TDICI. So you must remember whether ICICI is a partner, or for that matter it is having a sponsored company as TDICI or not, or for that matter whether pact is a venture started off by the ICICI and the US aid or not. Like that, questions can be asked. Then we have RCTFC. See, the first venture capital fund of our country, that is the Risk Capital Foundation, known as the RCF. It was established in 1975, and later in 1988, most I would say almost 13 years later, this RCF, Risk Capital Foundation, which was sponsored by IFCI, was converted, and it was converted into RCTFC, Risk Capital and Technology Finance Corporation Limited. And when we talk about the conversion, so not only the name was changed, but some additional responsibilities were also given to the RCTFC. It took over the activities of RCF directly, in addition to the management of other financing, technology development schemes, and venture capital funds. So technology was of prime importance during the late 1980s, and it was also being enabled by the venture capitals which were present, venture capital funds which were present back in 1988. The Indian startup ecosystem has raised in a total of US dollar 17.2 billion annually. This is an annual figure of the last projection, I think, investment from venture capital firms. So always remember this number. It can be asked by the IIBF that what is the latest number when we talk about the venture capital investment. So the number hovers around 17 to 18 billion US dollar. Next is that who regulates these venture capital funds? This can also be a pertinent question in the exam. So initially, direct government of India was regulating the VCFs. The venture capital fund and venture capital companies in India were regulated by the guidelines issued by Controller of Capital Issues, Government of India in 1988. But after 1988, we had the establishment of SEBI, and from that time only, SEBI overtook all the functions of regulating the VCF. In 1995, the SEBI, that is Securities and Exchange Board of India Act, was amended, which empowered SEBI to register and regulate the VCF in our country. Subsequently, in December 1996, SEBI issued its regulations in this regard. And when I talk about the replacement of these guidelines of Government of India, yes, SEBI replaced these government guidelines which were there since 1988. So right now, SEBI is the regulator for the VCF. Fine. So not only the regulatory aspect includes the name of the regulator, but also various definitions that how SEBI defines the VCF, and under that also whether a particular definition holds true for a domestic company or for that matter to a foreign company as well. All these things we have covered in an elaborate manner in our paid batches. So our paid batches are already running. uh, Many students have enrolled in the classes. They are consistently improving while attending the sessions. They are asking doubts, and the one-to-one communication is helping them to solve the doubts in real time as well. So if you want complete comprehensive coverage of the entire JIIB, or if you are preparing or willing to prepare CIIB also in the upcoming attempts, then also you should join our paid classes right away, because right now we are celebrating the Independence Day, and on this occasion we have offered a bumper sale for all of you. So on the occasion of 79th Independence Day of our country, we are offering the huge discounts on JIIB CIIB Increment Mahapack. If you enroll in the Increment Mahapack right away, you will get 82% flat discount, plus along with that 1% additional discount is also there. So in effect, 83% discount you can have if you enroll via the official Adda 247 application. In the application or the app of ours, you will find some coins, and while redeeming, when you will redeem those coins, you will get this additional 1% discount. So effective discount will be 83%. Along with that, you also have the 3x validity. This 3x validity will be applicable on the JAIIB CAIIB Mahapack also. So if you are purchasing the Mahapack for 5 months, we will give you the validity for 15 months. If you are purchasing for 9 months, you will get it for 27 months. Okay. Now the question arises that how we can avail these discounts, or what is the coupon code. So the coupon code which you can apply is Y1003 for maximum discounts. Only by applying this coupon code you will be able to have this 83% discount plus 3x validity. Okay, so this was it for today's class. If you have any kind of doubt, feel free to ask me in the comment section. We will meet in the next session. Till then, goodbye everybody, take care. And if you have any doubt, you want a telephonic conversation with our experts, then you can ring here on this number, that is 981-9819-247. That is the contact number which is written here as well. Okay, so okay everybody, we will meet in the next session now.